everybody. Welcome to the Trading Market Technicals Morning Call video for Tuesday, August the 20th. Red again, 4 days in a row. Dow Jones down 70, NASDAQ down 13, S&P down 9, Russell down 11. We were expecting a move lower, and we are getting it, and I am looking for a bounce now. I'm starting to see that the markets are a bit overextended, and the bounce is going to really determine which way this market's going to be headed. I think it's going to be really important to monitor what type of bounce we get. Do we get a bounce with volume, or do we just get this lazy move higher with no volume, and then the markets regain control to the downside, and we start making lows? I do think that when we do bounce, it's going to be a great shorting opportunity. Between now and the end of September, we're coming across some seasonal weakness, and the markets were just at all-time highs, and I think that a lot of market participants, investors, and traders will start to begin taking profits at these levels. So, and I also think that's going to create a good buying opportunity by the time end of September comes rolling around. I have a couple of targets I'm going to show you in the chart segment. I just want to go over some of the indicators why I think that the markets are due for some sort of a bounce. Now, it is Tuesday, which we call Turnaround Tuesday, so logically, and we do, believe it or not, kind of rally or bounce on Tuesday. Don't know why, but they do call it Turnaround Tuesday, so it's something interesting to see if we are going to get that bounce early this morning. Now, yesterday when the market opened, we did get a little bit of rally going into around 10:30, and then we kind of stalled out, and then we tried again around 10:30, 10:45, and then markets just lost its footing and started rolling lower. But again, it was one of the quietest days that I've seen all summer, and you would realize, well, we're down 70 points. How can that be so quiet? Yes, we were very quiet. The trading was lethargic, and any stocks that we were looking at, a lot of gap plays that we like to trade were really didn't do much. They either gapped down and pretty much stayed that way, or the markets, a lot of the stocks were trading sideways. So you really have to dive in and dig in and start looking for some volatility. Now, the VIX actually did pop up yesterday as well, but it's just a really eerie that how quiet it was during the course of the trading day. And I think that's going to eventually start picking up momentum, and trading is going to be a lot more active. Now, today and between today and the next couple of weeks, you have to be very selective in your trading. It's very important because of the fact that we have a lot of people and traders and market participants are taking their last-ditch vacations. Volume has really been anemic, and it's been really drying up pretty bad. So you want to be very selective in your trade setups. Cash is always a position, as you know, and yes, although you're not making any money if you're in cash, but you're not losing any money, and you don't want to definitely be getting chopped around in this market when there's going to be plenty of opportunity in the coming days and weeks. And I do think that August is not going to be so quiet as many people think. Now, I could be totally wrong. Again, this is just my assumption of what I'm seeing on the charts and what I'm reading, but I do think coming into the end of August, the beginning of September, I think we're going to have some movement in the markets, and that's when you really want to be ready for. So sit back, relax, wait for the market, wait for a trade setup. Let it be basically obvious that you're going to see something you like. You can identify your risk, you can identify your profit, enter the trade, and manage it accordingly. So anyway, let's get back to the indicators. The NYMO McClellan oscillator, we are at 99. We are in an area where more than likely we are going to be due for a big bounce. Well, I shouldn't say big bounce. A bounce. How big it is going to be determined on price. So let's keep an eye on this. We could even move lower in the morning and then really start to rally up in the afternoon. Again, we're down 4 days. So anywhere, starting to look 3 to 4 is when I start looking for bounces. So this is something that I would not be recommending to be short or looking to short stocks in these areas. Now, remember, if you're day trading, obviously it's something different, but if you're swing trading or holding a position or you want to build something, now is not the time to be short. You want to short green and into resistance, and that's what we're going to be looking for on this next bounce when it does happen. Okay, let's take a look at a couple other things that I wanted to show you from yesterday. And as you know, on yesterday's segment, I did show you a bunch of indicators, but now I want to show you a couple of things Here's the end of day tick. Above zero, we're very bullish, and as you can see here, since 2012 lows, November, we've been really just kind of chugging along. But every time we click these plateaus, you can see here and here and here, we start to roll over. And sure enough, look what's happening with the tick. We're making lower highs and lower highs. And this is what we do not want to see. But again, that's why I think that the market internals are starting to break down. And coming into seasonal weakness, I think that this market is going to be due for a deeper downside correction. Obviously, things can change, and they do change every day. But this is what I'm seeing right now. Here's the tick. Let me show you the New York Stock Exchange new lows. Now, I had mentioned this. This is the last time I saw something like this around negative 500, and we were due for a bounce. We're not there yet, as you can see. We're about half the distance, but we're getting close. So we can easily turn back around and then really spike up and get a big down day. And then that's when you want to start looking for bounces as well. But since the McClellan oscillator is at 99, and that really does take one of the precedents, it's a very reliable indicator. I'd be looking for a bounce today. I was looking for one for tomorrow. From yesterday, but it didn't happen. But in the next couple of days, I do see some sort of a bounce. Again, we don't know how deep it is, how strong the bounce is going to be until it really happens. But keep an eye on it. As you can see, we're down 250 from when we were literally just the beginning of the month. I think we're at 25. So that's a big change. So we could spike even higher anywhere in this area here, 400, 500. That's really when you want to start looking for, saying, okay, well, maybe we are going to get that bounce that we're looking for, you know. Here's the VIX. Again, now we broke above the 50 and the 200-day moving average. That's a good sign. And now we're outside that Bollinger Band. Now, if we close inside that Bollinger Band, okay, that's going to put a buy signal into equities and a sell signal into the VIX. Now, when this bounce happens, there's going to be a nice little play. You can actually play the VIX when the market does. If the bounce can happen for a couple of days, the VIX will probably sell off back down to here again. You could trade that VIX on the long side. You could use the VXX, but again, just a trading instrument. You don't want to be holding the ETF. They do erode over time. You could buy the VIX calls, but this is something that I'll be watching for a little bit of trade to buy volatility again. As you can see here, we have positive divergence when the market was going lower. Here, RSI, MACD, stochastic. So that was when I had called the volatility trade a couple of weeks back, and sure enough, it worked out really nice. So and I noticed a lot of guys had taken that, so that's good. Here's the CBOE, and here's what's interesting. The markets have sold off for 4 days in a row, and the CBOE put-call interest ratio is at really still bullish at 90-92. But we're on here. If you notice that from July on, we have been trading sideways. No fear. There's still really no fear in this market to show you that that market participants have been buying puts to hedge their portfolio. So as of right now, we're still neutral. So that's really something interesting while the VIX is running higher. Okay. So a couple of targets here. Now, here's the S&P 500 60-minute chart, cash. Here's the cash. And I had mentioned this descending triangle. We met our measured move. I took all of that off. Okay, here's that thin zone area. The first area is going to be here, the 1630, 1635 area. The next area is going to be the 61.8% retracement, which is going to come in around 16, 18. And then, obviously, right up in here, 1596 to 1600. Now, these are the areas that you want to watch for any type of bounces, and these are some of the target areas. Now, it's very possible that we could retrace this whole move back to the June 24th lows of the 1560. I definitely would not rule that out. I don't think everything just goes straight down and or straight up, so there'll be bounces ahead to be short. But this is my first target. It will be 1635. We'll see how that holds. That'll be S3, and that's in the S&P cash. Okay, here's the spiders. Did a quick Fibonacci retracement from top to bottom of the June 24th low. We have just broken down below the 50-day moving average, and as you can see here, this is a pretty big move for 4 days. And you know, it's on the chart. A lot of the ETFs are moving a lot more than the stocks were. But if you could see here, we had a gap down, and then we had you've noticed the body really is kind of small. Really didn't have too much of a big movement. Like we were down 30 on Friday. I think down 50 on Thursday, and then we just had that one big gap down So that really kind of kills day trading too when you have these big, large gaps down or up, because a lot of the move is already made, and most of these stocks go sideways. So you have to really dissect and look into these and do a lot of scanning. Look into these moves and try to find the best stock that you possibly can, and manage that risk accordingly. But if you could see here, we're at the 38% retracement. We broke through it, and we're heading into the 50% retracement. Now, here's that thin zone and the spiders. So logically, I mean, if you look at here, coincides pretty nicely with the 76.8% 76.40% retracement, right at 159.36. Here is that thin zone. So logical target would be somewhere around here in these two areas, 61.8 or the 76% retracement. Now, don't forget, we still can move this. We can get down to the June 24th lows while the 200-day continues to move up. So something interesting here, but these are going to be the targets, going to be right up in these areas here, 50, 61, or really 76% retracement I'm looking for. And then once we hit that, right, we don't want to just look to buy it. We want a little consolidation, maybe going sideways, and then take out that little sideways consolidation high, and then maybe look to buy that on a retracement rally. Here's the diamonds. Finally broke both of the uptrend line, from the November 2012 lows. As you can see here, now these have both been broken. So the Dow, I think the Dow is now actually has turned bearish in the sense that we are moving lower and starting to trend lower now. Instead of uptrending, we are downtrending. So the next bounce would be something into that 50-day moving average and see if we can recoup this lower trend line. And if that does fail, that's going to be a decent short in the Dow Jones. Here's the transports, IYT. Now, the transports really didn't do much yesterday, but as you can see here, very weak. We did stop at this horizontal trend line resistance, which was resistance, now support, and we really are right here in that slanted trend line right up in here. So let's see if this has momentum. If this starts to break down and really starts breaking down hard, this is just a matter of time before all the others will follow the transports. Here's the Russell. Now the Russell's starting to finally move lower, and as you can see here, held the 50-day moving average on Friday, broke down on Monday, caught this horizontal area of support, which was resistance, and now the next one is going to be the uptrend line from November 2012 lows. This is one of the this is the only sector of the five that we follow is up above the 2012 lows. So if this starts to break down as well, the two leaders will drag everything down with it. Now, a couple of other sectors that I've been following, and this is the IGN, which is the networking ETF. Just the other day made new highs, and as you can see now, we gap lower, and now we're trending even lower. So this is a nice little sector here that I'm looking for. And it has the Netgear and Cisco and all of that stuff, and you can just Google components of the IGN and look for the weakest stock, with volume. I'm looking for another bounce up here. I like being closer to resistance or anything around that area. So even if I was up in this area here or in here, or even filling half of the gap, if that were to happen and then fail again, then I think that you're going to get rotation out of the networking sector here, which was very strong pretty much all of 2013, and rotating it to something else. Now, another sector that I don't have up is the XRT with retail, consumer discretionary, which I showed you yesterday, really taking a hit, and we're going to have a lot of earnings coming out with the consumer discretionary sector, a lot of the apparels and everything else, like Macy's reported bad earnings. So again, something to keep an eye on if you're looking to do a short, looking to get a short. Go to the weak sector that's breaking down, money coming out of it, and look for the weakest stock. That's how you trade it. So IGN, weak. Here's the SMH. We did get our head and shoulders pattern that triggered. So this is a valid bearish pattern. Here's your head, here's your left shoulder, here's your right shoulder. Now, one thing I do want to show you is, so we get a little conflicting, is that on the weekly chart, right, take a look at this. What's happening? Bull flag, bull flag, bull flag. So on the weekly chart, we're still bullish. So I just wanted to show that to you right here and here. Right, and here's your flagpole. So we're still bullish, holding this long-term uptrend line on the weekly chart. So just keep that in mind. when you're looking at short, take a look at the weekly chart as well and see where this see where it goes, because this is something very interesting here. Now we're still, if you want how you draw it, if you want to grab it to the tails. That didn't actually break, but if you bring it down to the body, it broke. So depending on how you draw your trend line, but just something very interesting, guys. SMH very, very weak here, so it's something that I will be watching in the coming days to see if we get some sort of a bounce back up. Your area is going to be here. This just the trend line here. That's going to be your first area of or your first target area if we start to break down even harder. Now, Intel did rally yesterday. I think it had some kind of news out on it. Not too sure. Goldman, another sector. So you could see that the evidence is upon us that we have the financial sector breaking down. We have various parts of technology breaking down. We have our leaders breaking down, IWMs, which is the Russell, and the transportation sector breaking down. So, and we have our indicators. Market breadth is actually breaking down as well. So you have to be very, very careful here, guys. I wouldn't be picking bottoms, I think, this time around. I think this might be a little more for real, and we should see a deeper downside correction here in the coming weeks. So I think you're going to have a better opportunity to buy lower than to be picking at the top. Now, if you're looking to play a quick retracement rally, make sure you get that and you realize it is quick, and if it does fail, you need to get out quickly. So that's against Goldman Sachs. Here's XLF, as you can see, really breaking down now. Broke down from this this resistance, this horizontal trend line support, which broke, and now we're actually going to be headed to the 2012 lows, which would be right up in this area. That's going to be the first target. Apple doing quite well. Apple actually just about, I think, well, we're looking at 518, so we came really close, within 4 points of our target, and that's that gap area here. We filled this thin zone, as you can see, once we broke out of it with the Carl Icahn pump. As you can see here, we just literally broke up. Now, I wouldn't be buying Apple here. I'd be looking for a pullback and see which area holds. And if it doesn't hold and starts to break down again, then you got to look. You got to really seriously get out. But again, raise your stops. Yesterday's low would be the ultimatum for me if I was long and look to get out. And then you want to re-enter, look for some sort of cluster area of support, and then look to re-enter and see if we can actually trend higher here. Lastly is the Qs actually, and as you can see here, Qs no help from Apple, really starting to break down here, guys. So use caution. Again, day trading a little different. You got to be a little bit more selective because we don't have any volume. But again, remember, cash is a position, and be very selective in your trade setups because we are coming into a period where there's lack of volume, lack of market participants, and we have moves that are a little bit what's the word I'm trying to use, but we have moves that are going to be a little exaggerated. So just, take a step back here. A couple of good trades for the day. Bank up some dollars. Just set aside, until the next couple of weeks. Ride the storm out for a couple of weeks, and then coming into September, volume will definitely be picking up. So be interesting to see what happens today. Remember, I am looking for some sort of a bounce. We didn't get it yesterday, but the McClellan oscillator is at 99. Maybe we get a little flush in the morning and then a rally going into the afternoon. So just keep that in mind. Have a great day, everybody. We'll speak to you tomorrow. Take care.